Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Scroll through the comments section, want to answer some of your guys' comments. It says, regarding oil and oil-related commodities, are you concerned that the release of strategic oil supplies might curtail or thwart your expectations for oil to rise far above $100 a barrel, to 200 or 300 a barrel? Also, are you concerned that the oil price might not rise to $200 a barrel due to countries deciding to increase or revive their domestic production of fuels due to $100 plus barrel price pressure from non-domestic oil sources? Well, this is what I think, and maybe it's right, maybe it's wrong, but I still believe that oil is going to go above $200 a barrel, somewhere between $200 and $300. And why do I think that? Because they have massive amounts of inflation. A tsunami of inflation is coming. Oil is priced in dollars, and we've got this tsunami of inflation coming. They've already printed it. It's already in the system. Now, the system's just going to account for it. We've started to see the beginnings of that printing, and then the big portions coming. They are still stepping on the gas, printing about 10 to 13%, somewhere in that range, continually. So it's going to remain elevated. There's something bigger than just a supply demand pushing all of these commodities. They can't all go up like this in one time. It has to be inflationary. And the dollar is strong too. Usually when we have inflation, it is driven by the real estate market. This inflation is not driven by the real estate market. This is driven by probably a long-term debt cycle, and they're needing to, we'll call it, the only way that they can get through this debt is if they inflate it away. So what are they doing? They're inflating like no other. I think there's other problems, I think, overseas as well. I think they need a whole bunch of dollars. So they're going to inflate, and basically recapitalize the entire world through inflation. So when you look at all these charts, they're all launching higher, everything, all over the place. Doesn't matter what it is. Crypto, it can be the S&P 500, it can be commodities. The only thing that hasn't really gone up and moonshotted has been precious metals, and I don't know how that's possible. I don't know how you can have massive rates of inflation and still have gold and silver hanging out. But what I'll say is this: they don't want you to be there. They're trying to control this. They're trying to do whatever they can. They're going to lose control of it. And I'm running to the spots they don't want you to be. Why? Because that's the spot that will protect you. You're off the grid. And precious metals, they will do well. They will try to hold them down. It's not going to work. So releasing a little bit of oil when you have problems with inflation is not going to do anything. And I have a feeling that we are going to run into supply-demand problems very soon, probably next year. That soup of inflation and the supply-demand problem is going to drive oil far, far higher. I'm still in the camp that we're going to see above 200, at least 200. I don't know how high, depends how much money they create. Remember, that's why we price it in terms of other assets. So, and that's why stocks continue to go up, because you've got all this money and it needs to go somewhere. It's not going to go into bonds. They're the ones buying the bonds, holding the rates down. So now everyone's just saying, where do I put my money? And that's going to happen for a long time. They're going to say, where do I put my money? Where do I put my money? They're going to keep piling it into, hard assets, commodities, precious metals, and probably even stocks. If they can keep interest rates low, money will continue to flow into these things until it doesn't. And maybe rates can't go up. Maybe it'll blow up too much things. So what they're going to do is they're going to buy bonds indefinitely and print a bunch of money and basically inflate the debts away around the world. That's a possibility. Money will still flow into hard assets when the rates get so negative. We have real negative yields, massive negative yields. Money's still going to flow into things that's going to try to protect its wealth. And what this is going to do is it's going to hurt a lot of people, this amount of inflation. Because on the way up, your salaries and what you make are going to be sticky, but the prices are going to start rocketing here. And I just came from the store, and I was kind of, some of the items that I was buying, I was like, my Lord, this thing's up like 50%. I was buying like bags, like garbage bags, and I was like, oh my goodness. I bought them a while back. I usually kind of stock up and then I stock up again. So we ran out completely. And last time I bought them for like $12 on sale. Now they're like $17.95. I'm like, oh my goodness, this is ridiculous. But I'm seeing that on everything. And I think this is just the beginning. So I don't know. I've always had my mindset that at some point that we were going to see a good amount of inflation. I was thinking it wasn't going to be as great as this, and it was going to be from real estate. This isn't from real estate. Yeah, we're going into an expansionary phase. We're just starting into it, but we're not building that many homes. They've been having problems building the homes, so we can't ramp it way up. They've been trying to, but we haven't yet. That M2 money supply growth was all from the banking system. So they're printing like no other. And all of these prices are going to go up. I mean, a lot. So I'm in areas and I'm in if that are going to be protected against inflation. Now, these things, if we look at if we look at the hyperinflation in Germany, what happened first? The stock market went berserk. It just went vertical. And that's what we're seeing kind of today. It's going vertical. Then, over time, the preferences of the people swapped and they went into hard assets shortly thereafter. So that happened for like a year or two. And then they kind of shifted their preference over next to precious metals and also commodities and things that they needed. So I'm just positioning on the stuff that can protect and preserve my wealth that I can buy today at good values. So is gold a good value? Yes, it's a very good value in relationship to the money supply, in relationship to monetary base, in relationship to stocks and other assets. So that's why I would prefer, even though it may be delayed behind the move, to buy that. I'm a value chaser. I'm not a price chaser. I'll go buy some good value, and I don't really necessarily care about the other stuff. Now, companies they're gonna struggle on this because as the prices start to increase massively, their input costs are all gonna go rocketing higher. So I've been in the camp of buying royalty companies, thinking that their input costs are insulated. So you have a direct way to play the price increase and the volume increase. So I continue to pile into royalty companies. I think that's a low risk, high reward area for investment. The mining companies, some will do well, but if your oil price is getting repriced higher and we do have a supply demand problem, I mean, it's going to rocket. I think uranium's a good bet as well. You're basically jamming a whole bunch of money into hardly any companies that their valuations are so small. So if you try jamming a bunch of money into it, prices have to counteract and will go far higher. It'll be a huge squeeze. So yeah, I think oil is going to do incredibly well. It could be delayed if they do the Strategic Petroleum Reserve, but I don't think it's really going to do much. What are they going to do? Put in a few, like 70 million barrels or 50 million barrels or whatever it is. It's like a half day worth of oil. It's not going to do anything. It'll slow some things down a little bit, but it won't stop the move, I don't think. And especially up to pretty high prices. Moving on down here. Someone had made some comments about that I'm in the green tech plays, and I am. That's kind of like the icing on the cake. I'm not in it solely because of that. I'm in it for the inflation protection, and these things are going to do well irrespective of green tech. Green tech's icing on the cake. If they try to dump trillions of dollars into that stuff, I think that the demand will go up, but the supply is going to be extra strained. I'm going after things that are very inflation protected stuff, and I'm kind of sitting in it. These guys, they're going to inflate. They're going to have to. I think we're coming to the end of a debt cycle, and they're going to try to inflate all this stuff away. And if they try to do it, they're going to have to inflate like mad. So what I kind of did preparing coming up to this is I got myself in a home. I got a super low interest rate locked in 30 years, tried throwing it out as far as I could into the future. Because if they're going to inflate, sure, inflate my debt away. And then I'm putting all my other assets in inflation protected things. And that's kind of how I prepared myself. What's inflation protected things? Physical metals and some mining companies and royalty companies and stuff like that. So that's kind of how I look at things. I don't know how that someone can think of that this could be a deflationary thing, and I don't think there's going to be a crash. I mean, if there's going to be a crash, you're not going to see it. You're not even going to be able to see it because there's going to be so much inflation and the prices will still increase that, I mean, it's going to crash in value against other things. That's in terms of ratios. So you'll see that valuation crash. Maybe stocks will crash, but they'll still go up in price. Their value will crash. It'll be able to buy less of everything else. So maybe that's kind of where my mindset is. Now, if you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.